Hi, Shae here, editor of the Daily Reckoning Australia. And I just wanted to get in touch today and talk a little bit about some of the recent price action that we're seeing in the gold market right now and how it's really only reinforcing my view that there are bigger falls in the gold price to come. First of all, let's start with what's happened on Tuesday. Now on Tuesday US time, so Tuesday night when we were sleeping, the spot gold price fell almost 1%. It dropped from $1,1238 US dollars to $1,1226 US dollars, and it did this within about the first 15 minutes of trade in the US, around 9 a.m. that Tuesday morning. Now, the simple explanation that I read everywhere was, oh no, it's just a reaction to the strength of the US dollar. However, when you look at the US dollar index, which is a good proxy to sort of gauge the strength of the US dollar, that only rallied 0.3%. So that means that gold has dropped three times the amount that the US dollar is raised. I'm not buying it. A 0.3% gain isn't actually that much. It's minimal really. Also too, this fall in the gold price is exceptionally odd when you consider the geopolitical and economic tensions that are happening around the world. We've got the Chinese market that's falling. We've got some of the largest corporate bond defaults in China at the moment. I think this year already something like 20 billion yuan has been defaulted on 6 months into the year, which is very unusual. We've got increasing geopolitical tensions between pretty much the US and any other country around the world. Now, these things are normally quite supportive of the gold price. So seeing these big sell-offs that we've been witnessing for the past few weeks is really unusual. It's also more unusual when you discover that Russia has basically liquidated its exposure to the US dollar. Now, some data's come through that Russia has sold off, as of March this year, it had nearly $100 billion worth of US Treasury bonds. However, as of May, it has pretty much ditched all of them, and they now only have $9 billion in US Treasury bonds as part of their foreign reserve. So this is basically a liquidation of getting rid of US dollars out of Russia's foreign reserves. Now, again, this isn't good news for the US dollar. It basically means that Russia's got a very bearish attitude, and it's sort of the beginning of the de-dollarisation of the world. That is, removing the US dollars from the epicenter of the financial system. That, again, should be good for gold, but yet the gold price isn't rallying on that news, which is why these sell-offs, still are quite perplexing because they shouldn't be happening. Furthermore, it gives us a little of insight what might happen if China were to take this road. Now, China has $1.1 trillion in US Treasury bonds as part of their foreign exchange reserves. So Russia's sort of, US dollar defiance that we're seeing here could very much lead to a bit of a sell-off from China of US Treasury bonds. However, I do think if we get some sort of hint that China's selling bonds, we might see a little bit more reaction in the gold price. In the meantime, you probably know that I am convinced that these price declines we are seeing is nothing more than a 10% correction in the gold price. After the gold price touching as low as $1,1220 US dollars on Tuesday, I'm still holding firm now on the fact that I believe gold will bottom out around the 1180, 1190 mark, and from there we will start to see the gold price rally. Ideally, this will all be over in the next few weeks by the end of August, and that's when the gold price starts to bump up again. That's all from me this week. I'll be back later in the week with more.